Hi friends, weekly stock market update part one. Remember, this is the news part. These are the insights from all my sources, whether they're in the hedge fund industry, whether they're in the stock market, investment banks, government, think tanks. So that's what this first part is. It's a new thing that I've launched to give people those extra insights beyond the individual stocks. Then we'll relate it back to stocks where I see the market going, what I'm investing in, and what the really big money is investing in as well. I'm calling it the Market Insider Insights. Anyway, been a busy week. That is me with the UK government's venture capital unit. So the venture capital unit deal with the biggest venture capital companies in the world to get them to invest into British projects, whether those projects are in quantum, cyber, AI. Those are the main topics that came up in my conversation with them. They also deal with sovereign wealth funds like the Saudi Sovereign Wealth Fund or the Singaporean one. And as I say, they deal with some of the biggest venture capital companies like Andreessen Horowitz, Sequoia, and the like. Now, those are some of the big VC companies which went on to invest in the likes of PayPal and Nvidia and Microsoft and Apple and so on. So great conversation with them, and what surprised me was how much we discussed quantum. And I guess to some extent, with all my focus on cyber and AI, and before that, so much on fintech, and obviously I've mentioned crypto before, I'd really overlooked quantum. And of course, then what happens today? Big announcement from Alphabet that their chip has made a breakthrough in quantum computing, which has come a lot sooner than I thought, and I bought more Alphabet. Now, I bought more Alpha because, as you already know, I already owned a bunch of it. But following the conversation with these guys and how much we talked about quantum, it just occurred to me that actually I need to keep a closer eye on what's happening in quantum, and I'll do that in future broadcasts as well, and look at some of the listed companies in the US in particular on quantum, which, like any other investment, you've got to make sure that it's not all talk and there is actually something significantly there. But the Alphabet play, I actually did it as a leveraged. I've worked it out, something like 5-to-1 leverage, but it's a separate issue. So gone in heavy on that. Anyway, I'll come back to some of the other conversation topics and insights that I get from the team. But it was great to have that lunch with them and be invited as a guest of theirs to talk to the entire team, or well, actually listen to the entire team. I also, and this is as of today, hosted 25 cybersecurity companies. They were largely from Israel. Whoops, where am I? There am I there, and there am I there. At the House of Lords. So it's been a long day, actually, and I've got a great investments program client call coming up a little bit later this evening in about half an hour or so. So that's a bunch of those companies. We also had representatives from Innovate UK. If you don't know Innovate UK, have a look at it. It's government-backed, invests in some of the early stage tech. This often gives me a good insight into where I think the broader market is going. We had Silicon Valley Bank, which is now HSBC Innovation Banking. The banks are good ones that I like to talk to and listen to, because they tell you early on which sectors are really making money with them and where their focus is. And if you've got, insights and access from the likes of HSBC and also from some of these accelerators, and you can see, because they'll see who's doing well, who's getting the big contracts, who's doing the big deals. That feeds down the chain into the pipeline and allows me just to get a mosaic of information, get some insights. We had Chris from the UK government, a specialist on tech, and again, he sees that early insight. And like I said, I think I'd under-focused on quantum. Oh, by the way, one of the topics we did talk about with the venture capital unit was nuclear fusion. There was a story out of New Zealand on nuclear fusion. They weren't so excited on that part, a bit more skeptical, so a bit more to do, but I'm going to keep an eye on that sector anyway. Kanishkata cybersecurity as well. Anyway, Rathbones, Paula, they manage, what was it, $126 billion. Always good to get her insights, also in terms of where the money's going at the other extreme of these things. So I'm going to share some of these insights with you in terms of specific stocks and ideas. So as I said, weekly update, part one. As I mentioned before, I call it my profit playbook, market insider insights. I don't think anybody else does this, relating the access that they have to the stock market, okay? And those insights that I want to give you, which go beyond what anybody else does, I think, on social media. So I think it's useful. I used to be a director at United Nations Association in the UK. I was on the Council of Chatham House for 6 years, and then on the investment committee for a total period of about 12 years, where we allocated capital to big investment banks like Cazenove. The Queen was our patron, and I guess now it's the King. And Jim O'Neill, Lord O'Neill, became our president under, let me see, he used to be chairman of Goldman Sachs Wealth Management. I was also part of the team which launched what's called the Chatham House Prize, which the Queen inaugurated many moons ago. And you'll know the Chatham House rule. So anyway, so these insights, that's the sort of think tank insights I like to read up on and look into. I was a visiting fellow at Oxford. I keep preparing this sheet, but just so you know, on business, I'm going to use some of those academic insights as well. So you've got the think tanks, you've got the academic insights, Bloomberg TV presenters, so sort of the media insights, and then governmental insights, as well as, of course, the normal insights that I use with the database for stock selection. Okay, so what I want to do with this is add a bit more depth and color and breadth, so you get a better insight into why I'm thinking things the way they are, and it's not just Excel spreadsheets and picking things out of a database, which obviously is important: value, growth, income, cash flow, Sortino, alpha, all of those things you're familiar with that I look at. But I think unique to what I do, both on the Great Investments Program but in discussion with you on social media, are those other important things where I give you a broader picture as well from all those sources of information. So you get a better insight of actually how hedge funds work and how we get a mosaic of information. So first of the 10 points I want to raise with you. Now, the tariffs are coming. The tariffs are a tax and they're going to be inflationary. What's going to happen is it's going to push up prices in several ways. One particular way is it's going to lead to profiteering by companies. Companies are going to say, oh, it's these consumer tariffs. So they're going to put up their prices, get fatter profit margins. Now, their profit margins are going to increase, and perversely, their profits are going to increase. We know this because washing machine companies, for instance, don't have tariffs in the US, yet when the tariffs were removed, the price point which it had been raised by was never diminished when the tariff was removed. In other words, you started charging a higher price. Whenever the tariff was removed, you just kept that price and you got a bigger profit margin. That has two implications. One, it's good for corporate America, perversely, because they're going to have fatter profit margins. They're just going to blame it on the tariff, just as so many companies in the UK blamed cost of living crisis to up their prices, but actually they were making mega extra profits. If you don't believe me, look at the banks, look at the water companies. There was just some ridiculous profiteering going on under cover of that. I am satisfied that that's going to be the case, not because I've thought of it, but in actual fact, I'd thought of it, and global head of economics at UBS had said the same thing. AI spend, like I said, with VC unit, quantum and AI, it's not original for me to tell you, and I want to try and be original with any insights I give you here about the AI spend, which is continuing, but also the quantum spend, both in the UK and abroad. People are missing how much is going into that, and that will be, I guess, AI on steroids is the cliche, but I will keep an eye on those companies in that space for you, so that if we get the trigger and we find more NVIDIA types boosted by both AI and quantum together, which is what's happening with Alphabet, but I want to get some of the earlier stage ones, so we get a 10x return, then I'm going to do that, because I would like a 10x return on my pension, actually. The tariffs will also be inflationary because it's a tax, okay? Very simple. It's a tax on US consumers, like VAT is a tax on UK, so it's going to... Now, what does that mean? Well, it means interest rates are probably not going to fall in the... beg your pardon. Interest rates are going to fall in the US, right? Which would tend to put a downward pressure on the US dollar, except there's a whole bunch of money coming into the US. So the dollar is not going to collapse. It's not going to get cheaper anytime soon. And will probably stay on an upward trend just because capital is going to the US, because the rate of growth of US equities, for instance, is far greater than anybody else. Basically, the US has been competing with the rest of the world. Now it's just accelerating away. Okay, it is going exponential compared to other markets. If you look at Europe and the euro, probably look to short the euro and go long the US dollar, even now, certainly for the next year, I would have thought. So despite those tax rises, because of those tax rises, you're going to get interest rates probably lower in the US. Remember, there's only two types of economic policy, fiscal and monetary. Monetary, you're talking about interest rates, sometimes quantitative easing, but really interest rates. And fiscal, you're talking about tax. Okay, so you're talking about tax or spending. So that's where we are with that. Now, there are going to be spending cuts, which could be recessionary, given the size of the US government, because the Department of Government Efficiency is going to enact cuts, which is another reason why interest rates will tend to be lower. That lower pressure on interest rates will keep the stock market incredibly buoyant. Okay, so another reason why profits from here on the consumer side anyway, the tariff thing is not bad for consumers, contrary to what people think, because the stronger dollar just means that you're buying Chinese goods for a cheaper price to you. So even if you increase VAT, it doesn't matter. The Chinese are basically paying your tax for you, which is what Trump wanted. Then you've got tariff being inflationary because basically US companies are going to face less competition, so they can raise prices. Why are they going to face less competition? They're going to have tariffs. They're barriers. So if you're a foreigner, it's going to be effectively your product is going to be more expensive. It's and therefore the domestic companies will have less competition, which is what Trump wants. It's a nationalist economic policy. Less competition raises prices. It's not good for the consumer. It's just the genius move that you're able to say, we're punishing foreigners. You're not actually. Okay? You're sort of, it's not so much you're punishing foreigners as helping your domestic economy, arguably. The extent to which you're punishing foreigners is this. The Chinese have been dumping their goods. Dumping is an economic term meaning you're selling something below cost onto the US markets and screwing Americans. Basically, it's like a drug supplier supplying them crap, and these guys have just been buying this rubbish and force-feeding Chinese with US dollars in exchange. And what do you do if you've got a ton of US dollars? Well, you buy US assets. So there's a whole bunch of reasons to do the tariffs, and they're not as stupid as the mainstream media would make you think. Okay? But overall, that is, my bottom line is, that is all good for the stock market. All right? That's not a biased pro-Trump person speaking or an anti-Trump. It is just the way it is. Syria, as I mentioned previously, no oil impact on that. Syria is not a major player in the oil market. The Israelis are destroying the military capability of Syria. It doesn't look like this new leader wants to pick a fight, even if he could, against the Israelis. I've been to Damascus, and I've been to the mosque where this leader spoke. The mosque, it's an interesting place, that mosque, because they believe that the head of St. John the Baptist, remember, head chopped off, Salome danced for him, and anyway, she was asked by the king, what would you like, because she was such a great dancer, and the king said Salome said the head of John the Baptist, and so it's said to be kept at this mosque. I didn't see it, but said to be kept there. Outside the mosque, which is another thing people don't realize, is the tomb of Saladin, who was born in, I think, Tikrit in Iraq, where, anyway, Saddam Hussein was born, to unify the Islamic Arab world. Syria has been at the junction since the Roman times, obviously, of history. But if this leader is, well, if he's wise and is able to bring in investment into the country and decides, well, actually, maybe we don't want to be a puppet, obviously, of Iran nor the West, you never know. Maybe I'm being over-optimistic and that won't happen. he certainly doesn't seem to object to all the naval bases, military bases of the Syrian army being destroyed by the Israelis, because common enemy, my enemy's enemy is my friend. Anyway, for the stock market, nothing negative. If anything, there could be some kind of Middle Eastern peace dividend. Maybe, as I say, I'm over-optimistic. Read the Abraham Accords. When the Jewish rabbi was shot in the UAE, Netanyahu said, we're going to work closer with the UAE. That would never have happened before the Abraham Accords, which is what Trump's son-in-law, Jared Kushner, implemented. Read them. They're extraordinary. They don't take long to read. I mean, it's only pretty short. But the Abraham Accords, to bring diplomatic relations between Saudi, UAE, Qatar, Israel, I think Egypt was in there as well, are absolutely extraordinary, and they worked on that point. And I don't think, with the exception of Iran, I don't think Iran and Palestine, I don't think the rest of the Middle East is as pissed off with the Israelis as you might think they are. The point being, for the stock market perspective, this could end up being quite a benign environment with a possible golden age in that region, where if you could, my dream would be if Palestine becomes like a UAE or Qatar. You might think you're an idiot. It's never going to be like, well, put enough money in, things could be, and the relations between the Israelis and the UAE, which are pretty cordial, and Saudi would one day hopefully be the same as the relationship with the Palestinians. Now, were that to happen, you've got a whole new growth economic engine right there. Okay, you get rid of the war. You just, Alpesh, you're being naive. Well, Hezbollah and Hamas have been pretty much. Now that's going to be amazing for the stock market as well, because that kind of background negativity going, you'll get a more push of money. Anyway, that's just by the by for now. And in Chatham House, you know, the Emir of Qatar had a state visit to the United Kingdom this past week. I wrote an article in Chatham House, in-house magazine. It's the number 2 think tank in the world on international relations and the number 1 outside the United States after Brookings on international relations. So I'd written an article on why we should have closer ties with the Qataris. And that was 6 years ago, when everyone was saying, no, blah, blah, anyway. So I was delighted to see the Emir of Qatar hosted at Buckingham Palace by the King. I didn't get an invite. I have dined at Buckingham Palace on other occasions, but I didn't get an invite for this. Anyway. But I'm glad that I'd written about 5 years earlier, and that our Foreign Office did follow through with all of that when the timing was right. Wages are going to rise. If there's inflation because of tariffs, guess what? Employees are going to ask to put up wages. That naturally happens. However, a stronger dollar keeps some pressure down on that, because what a stronger dollar means is, whilst it's cheaper to import stuff, it's more expensive to buy American goods, and therefore if you're a natural exporter, that puts a deflationary impact upon your domestic currency, and the which is a good thing. It's a counterweight, and wage rises will hopefully not be excessive, and too inflationary, because the companies will point out to the employees, you're going to make us more uncompetitive abroad. We've already got a strong dollar. It was actually a strategy Margaret Thatcher tried to use with joining the European exchange rate mechanism back in '92. It didn't work out because the unions couldn't think 3 steps ahead. That, well, actually, strong pound would naturally mean they just wanted their wage rises, obviously. If we look at crypto, I made the point that this is a political statement. Crypto is now a political act. Donald Trump, and most people miss this, had said, and I bought more Dogecoin, more Ripple, I'll come to that in a second. And you might say, you're bloody late to the party. Yeah, well, I'm not a gambler. So for all the gamblers it worked out for, good luck to you. He said, Bitcoin above $100,000. This is the president-elect of the United States. You're welcome. Let's make America great again. That's a statement about the head of government talking about a financial asset and making it clear he wants it to rise more. And this is thanks to him. Like I've said, he wants three things: the Nobel Peace Prize for the work in the Middle East, become a trillionaire, and he's going to do it through crypto, and be known as the greatest president since at least the Second World War, if not ever, in his imagination. No. Whatever happens, that crypto thing is going to go. Some of the banks have said it's going to double. So I had no problems piling into that. There's some exchange-traded funds on crypto. And I know I'm due a talk on that, so I will get around to that. Tesla. I bought more Tesla. Now, that wasn't just because it was a special trade on the Great Investments Program. It wasn't one of our classic ones with value growth income. But the background to that, what was noticeable was when Elon Musk was at Notre Dame. So he's on the president's plane. He's in Notre Dame. Why is he in Notre Dame? He gets a lot of time with the president. The way there, the way back. He's obviously running the new co-running the Department for Government Efficiency. He's going to get whatever he wants. All right? And it's going to, part of it come through Tesla. It's going to come through his IPOs on his other vehicles like SpaceX and so on. Together with that, Alphabet mentioned their new AI chip. That's incredible. It's been underestimated. I think it's up 6% in one day. And I was happy to pile more money into that. I was happy to buy more, 3 times S&P 500 leverage, 2 times Tesla. I think my leverage position on that is great because I've not just done it through exchange-traded funds. I've actually done it also through a standard stock leverage position, which I'm not going to talk about because that's more... Leverage is risky, so I don't want to talk about that here. I'm going to put together a little sort of a special play thing where I'm going to discuss my Christmas picks, not in terms of these are my 10 stocks, blah, 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 yawn, yawn, yawn. I do that anyway. But I'm sort of going to do, if I was Santa Claus and sort of be a bit wild, what would my picks be? You know, when somebody go, what's your outliers? What are your, sort of, what are you going to regret in a year from now? You might not buy this, but you're going to regret a year from now that you didn't. And I'm going to do a special one of those, and you're going to love it. And I know in 12 months I'll be going, oh, wish I did do that crazy trade. You know, it's a bit like what's the wildest thing you'd want to do, and you say this, and in 12 months you go, I wish I did do it. Because it's going to make a shed load of money. I know it is, and I'll come to that in a future one. So keep an eye out and do like and follow for all of these. My Ripple, so I bought Ripple, 2019? And the idea was buy it for 10 years. Andreessen Horowitz, remember one of the venture capital firms which is invest in some of the biggest companies out of Silicon Valley. And I'm regularly in Silicon Valley, and if you follow me on YouTube, you'll know that. And I said the venture capital unit work with them. Anyway, they're one of the people who backed Ripple. XRP, which the Bank of England are trialing. I met Mark Kearney a few years ago when he was governor of Bank of England in Delhi, when he was in Delhi for an event I was hosting and he was speaking at. Anyway, Ripple had been zero. My Ripple investment, nothing, dropped to next to nothing. But I said in 10 years, it'll either be still worth nothing or it'll be worth something. Anyway, this past week it's gone up and I'm up 250% on it. Just in time for Christmas. Ridiculous, crazy. I bought more. As well, I bumped into somebody. I was in a pub in Hammersmith, on Friday night, which I don't normally do because I'm teetotal, but I do love pubs. I think it was the Dove. I was at the Dove on Friday night, and next to me was a chap who said, "Mr. Patel," he's Cazenove portfolio manager, and then we started talking about all of these things here. So I have shared pretty much all of these things with him. Anyway, and if he's watching this, Charlie, how do you do? Anyway, that's it for now. That's part one. Part two will be specific stocks, and it'll be coming up probably tomorrow, possibly the day after, which will be the specific stocks in the stock market and stocks that I particularly like. I hope you do like this. Do let me know that you do, because then I'll continue doing them. If you're on the Great Investments Program, I already know you like it because you've already told me. Okay, but for those on the Great Investments Program, I'll give you specific deeper dives when I talk specific stocks with you and which ones relate to these things. So you're going to get a really detailed, specific, I like this stock, not just because of the data, but because of this. So I'll start naming more names for you. Okay. Thank you all very much.